A crazy week in markets altogether across the board. Not one market could escape what happened this week. We saw wider ranges. We saw volatile spikes up and down, not only in equities, we saw it in rates, we saw it in commodities, we saw it in oil. It was a across the board crazy week that ended really with equities ending on their lows with the on the quadruple witching Friday, which took E-minis to their lowest since 2017. And right now we're kind of get to that point where technicals kind of go out the window. We can do some long-term technicals and talk about 2000, 2100 levels, but at this point it's all going to be about momentum. And right now momentum is to the bears. We saw volumes very high, and we saw continued ranges. I mean, this morning it looked like things were going to go well. The market was trading higher, and then poof, the sea legs got kicked out from under it, and the sell-off began in the afternoon. And we saw the same type of trade in the bond market. We saw selling, mid-morning, only to be followed up by a rally late in the afternoon. So at this point, it's going to be a very disconnected market. You're not going to see that stocks up, bonds down, stocks up type trade. It is going to be an isolated trade per commodity where the big position move is going to be. And late Friday, we saw more taking chips off the board than we did taking any risk. And I think that's going to become more of a pattern that we, as long as we continue to sort of fly the plane with no windows, like we have been with bits of information coming out about the economic ripple ramifications, whatever you want to call it, about the coronavirus. Obviously, with states closing now, it's going to put even more economic stress on the market. Notwithstanding the unemployment claims that are going to come out next week through the roof, I think at this point we are all just hoping for the best. We know to expect the worst as far as economic data comes. So why don't we just wait and see what happens? And I think those that want to wait for the dust to settle are continuing to take chips off the table. We will continue to see that as the days and weeks progress without any clarity on the medical front. The VIX index made a big spike this week, but it did not go up for very long. Came back, actually was lower. Saw a bit of a lower trade when equities rose this morning, but ultimately was settled the week, near the midpoint of the week, but still on the red line level. I don't see us the fear index really giving us any indication that things are good. The VIX index, which had lost a lot of its credibility over the years, hovering right around 10, while equities were bouncing off new highs, it seemed daily, with no fear of going down. Now that fear is back priced into the market. So VIX index now maybe trying to recoup some of what it used to read, and that is given its name, the fear index. It's now really reading that, hovering, sort of close to 70 after spending so long by 10. A lot of difference there, but obviously circumstances and environments have changed very dramatically, and those wider price ranges and sharp price movements will continue to see the VIX ranging and holding at elevated levels. Lastly, next week, what do we have? I think more of the same. While I think a lot of the equity longs are out, there are still a lot in there. And if you're looking, if you're a fund holding, looking for redemptions, you have to sell. I think at this point, there's no one that is going to be immune to the selling that's going on. Yes, there are patient longs out there that may look to add when the dust settles, but the dust hasn't settled yet. It may not settle for quite some time. So, the Fed's done its part. It's involved itself in the short end of the Treasury curve. It's continued in the back end with buys. You're going to continue to hear them talk about what to do, if they can, anything more with rates and any kind of operations with other central banks. But at the end of the day, risk takers who have been benefited from this Fed and this Fed style of management is now starting to lose faith in that. And so you're going to see equity longs continue to come off the board. I think there's going to be some kind of solid ground beneath our feet. However, we maybe just haven't gotten there yet. At this point, it could be a long, slow trade to find that bottom. And at this point, we thought maybe we found it at 2,400, and we did not. So looking ahead to next week, it's going to be more volatility, wider ranges, and if you're a risk taker who wants to take some risk off the table, you're going to have to act quickly because it looks like you're not going to be alone. So watch out, more downside ahead. Calmer days will prevail in the longer run. It's going to take some time and a little bit of patience.